I trade less than 2 hours per day and have consistently made over $20,000 per month for over 2+ years. And let me tell you, trading doesn't have to be complicated and something that you have to spend all day sitting at a desk glued to your screen. In today's video, I'm going to share with you everything that you need to know about scalping in the markets. I'm going to share with you some of the most valuable lessons that I've learned over my past 5 years of trading and also my highly effective and profitable scalping strategy. So with that being said, let's get right into the video. Okay, so I'm going to break down everything that you need to know about scalping in the markets. So we're first going to start off with what is scalping. And essentially what scalping is when traders are focused on capturing quick intraday price movements, generally anytime between 1 to 15 minutes. So I consider quick moves anywhere less than 15 minutes. Some people talk about scalping from seconds all the way to a few minutes. I personally classify as anything scalping underneath 15 minutes. So anything above 15 minutes, I consider day trading. Anything below 15 minutes, I consider scalping. And what scalping requires is the ability to make decisions quickly based off of intraday price action. So intraday price action is within its intraday. You're not really putting too much emphasis on the higher time frames since you're capturing quick moves in the markets and you're only in the markets for a few minutes. So you don't really have to worry about those higher time frame moves. And what happens is that you can flip biases fairly quickly, right? You can be bullish in 1 minute and in another minute it can flip bearish fairly quickly. And what you have to understand is scalping is not about hitting home runs. It's primarily focused on base hits. If you've ever tried scalping before, you understand that you're not going to be hitting home runs when it comes to scalping. You're focused on those lower time frames and you're looking for those base hits to add up consistently, right? Those consistent base hits that you hit every single day is what makes scalping profitable. And scalping is usually done on stocks that have high volatility and liquidity. If you ever scalp in the markets, you know that it's a must have to have a lot of volatility and liquidity in the markets. If you don't have volatility, then what's going to happen? It's going to be very difficult to scalp on a day-to-day basis. So you need to make sure that the markets are very volatile and liquid so you can get in and out quickly. And scalp trading should have high accuracy and work out instantly. So since you're trading on the lower time frames, what you like to see is precision on the lower time frames. And you like to see these trades essentially work out instantly. As soon as you get in, you want to see the trade work out in your favor. If it doesn't work out, you cut your position. And that's so great about scalp trading is that you don't have to wait a while for it to work out. It's not like swing trading where you have to let the higher time frames play out. Scalping, it works out, it doesn't. You understand that right away. So with this being said, let's go on to what I look for when it comes to scalping. So the main things that I look for when it comes to scalping is number one, the time, right? The time is very important, right? The time that I look to scalp every single day is from 9:30 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. The reason being is because this is called the New York session open. This is by far when the markets are most volatile. Within the first hour to an hour and a half of market open, that's when we have volatility in the markets, and that's when we can look to scalp the best. If you've ever tried scalping later into the day, after 11 or past noon, where you'll see a lot of the times the markets slow down quite a bit, is because there's not that much volatility, there's not that much liquidity later in the day. So majority of the trades, whenever I'm scalping, there's a time period that I look for, and that's from 9:30 a.m. to 11 a.m. every single day. The second thing that I look for is news catalyst. So whenever I look to scalp, right, something that I always like to look for is some sort of catalyst that can drive the market. This can be earnings, this could be red folder news, like CPI, FOMC, another potential news event, right? For me, when I like to scalp in high probability environments, what I need is what's called volatility and liquidity. If I have volatility and liquidity in the markets, I can scalp whatever. But that's exactly what you need. You need some sort of injection of volatility and liquidity into the markets. And this usually occurs when you have some sort of news like red folder or any sort of news catalyst. And that's the best time to look for trading opportunities. And the third, what I like to look for is some sort of trend, right? Trending markets are a must when it comes to scalping. We need some sort of micro trend, right? Either towards the upside or towards the downside, right? We need an uptrend or a downtrend. What we can't look for is when the markets are ranging. When the markets are ranging, consolidating, or in chop, that's when you're going to get eaten alive when it comes to scalping. So we need to be able to identify the time in the markets, the news catalyst, and also trends, right? These three are the most important when it comes to scalping in the markets. So if you have these three things checked off, this is going to be a great recipe for intraday scalping. Now let's understand risk to reward when it comes to scalping. Now let's understand risk to reward versus win rate. So when it comes to trading, there's a lot of misconceptions that you need an 80, 90% win rate in order to become profitable. And that's just not true, right? In order for scalping to work out, right, you don't have to have an 80 to 90% win rate. A lot of the times when people flash these high win rates, what they have is a negative risk reward ratio. So let's say, for example, you have an 80% win rate. With an 80% win rate, you need a minimum of a 3 to 1 to become profitable. That means for every $3 that you risk, you're looking to gain $1. For me personally, this doesn't sound that appealing math wise, right? You're risking $3 to gain $1, right? If you have a higher win rate, 80%, that means you're going to be winning most of the time. But whenever you do lose, you're going to have those big losses. So what I personally lie under is around 40 to 50% win rate with a 1 to 2. So that means for every dollar that I'm risking, I'm looking to gain a minimum of $2. In this case, right, I can be right 50% of the time and I will be very profitable. If you have a 50% win rate and a 1 to 2, you're going to be very profitable when it comes to the market. If you have a 40% win rate, a high 40s with a 1 to 2, you're going to be a very profitable trader. And that means for every dollar that you're risking, you're looking to gain $2. And this is where I like to lie in. So let's say every single day you take 2 trades. One is a winner, one is a loser, right? On the winner, what you gain is 2R, right? You gain 2R on the winners. On the losers, you lose 1R. That means every single day you're going to come out with 1R, right? Of course, this is what you want to strive for. It's not exactly going to be 50%, right? If you do have a 50% win rate, that's excellent. Over the past few years, I've been able to achieve close to a 50% win rate with a 1 to 2 risk reward ratio, and I've been very profitable. So this is the stats that you want to look for. You want to be looking for a 50% rate with a 1 to 2. Of course, this is how I personally like it. Of course, this is how I personally like it. I know a bunch of traders, as I mentioned, with a higher win rate, but they have lower risk to reward ratios. So now with this being said, let's go into some of the setups that I look for when it comes to scalping. So now I'm going on to some of my 3 favorite scalping setups when it comes to trading in the markets. Number 1 being my favorite opening range break and retest. And you guys have heard me talk about the opening range break and retest quite a few times here on this channel, but essentially what it is, once again, is we're looking for the break above or below your opening range candle. So this candle can be on the 1, the 5, or the 15-minute time frame. And essentially what we're looking for is the break above, a retest of your opening range high for continuations towards the upside, or we're looking for the break underneath your opening candle range low for this continued push towards the downside. And that's essentially what we're looking for in the most basic terms. And this is one strategy that I look for when it comes to scalping every single day in the markets. So let's go on to the next setup that I look for when it comes to scalping. The next setup that I look for is what's called the opening drive. So the opening drive play and what we're looking for is a clear trend in the market. So this is its previous day's price action. So this is its previous day's price action. And let's say in the after hours, what we have is a lot of consolidation, right? What we're looking for when it comes to market open the next day, which is the current day, we're looking for a big push towards the upside right off the bat. So essentially what we look for is a bullish previous day, right? If we have a bullish previous day and then in the pre-market we have consolidation, all we're looking for is that continuation of the trend. We're just looking for the continuation towards the upside or towards the downside depending on its previous day price action. And this is a great scalping strategy that happens right off the bat. I'll talk a little bit more in our examples of exactly what I like to look for, but this is the basic premise. You look for a trendy day in the previous day, consolidation or pullback in the pre-market, and now you look for continuation of the trend coming into its previous day. And now what I have is the 84% rule. So this is also another one of my favorite scalping setups. So basically what the 84% rule is if the trade doesn't work the first time, right, we can look to take the exact same trade the second time and 84% of the time it works out. So in this case, let's say we have this swing high here and we look to buy this retest off here, targeting this swing high, but the first time it actually comes back and hits our stop loss. So let's say our stop is right here, we take out our stop and price ends up reclaiming this key area. If price can actually reclaim this key area, we can look to put on the exact same position with the exact same stop, with the exact same targets. And the second time is what's called the 84% rule. And 84% of the time, it works out the second time. So this is a great scalpers type trade, because if it doesn't work the first time and there's an 84% chance it works the second time, this is great for scalping. And this can happen on the reclaim of a trade. And of course, I'll talk about this more in our examples as well. So with that being said, these are some of the scalping setups I'll look for. I'll go into a little bit more depth in the examples. And now let's go on to some of the tips that I have for scalping. And some of the tips that I have is that you should only take 1 to 3 trades a day, right? 1 to 3 trades a day at max when it comes to scalping. A lot of people think that scalping, you sit there all day and you can take 10 to 20 trades. I personally would say focus on 1 to 3 quality scalps a day, and the max amount of trades that you'd like to take is 5, right? No more than 5 trades a day. If you take more than 5 trades, right, you're probably over trading and you're probably not looking for quality setups in the market. And the next one is, if the trade doesn't work right away, get out. There's no reason to hold onto a scalping position if it doesn't happen right off the bat. A lot of times what you look for is precision, and if it doesn't work in your favor, you need to get out of your position or cut your position, right? If you're in a scalping position, it hits your stop loss and you decide to hold your position, think it's going to come back, that is one of the worst things that you can do. So if the trade doesn't work out, get out. Sell at key levels, move stop to break even, and bar the rest of the position. This is a great tip for scalping, is that you want to be selling at key levels. So for example, right, we're in a clear uptrend once again, right? You're looking for the retest of this key level, right? You're having a push towards upside. You're going to take a decent amount of your position off at high of day, where you're going to take your position off at high of day, where your original stop was down at this swing low. Once it hits your first target, right, that's when you can move your stop up to break even. You can move your stop up to break even. And then for the rest of your position, right, you can bar your position. Basically, bar means, right, once it breaks underneath its previous candle, you can cut your position. And this is the best way to protect your position when it comes to scalping, especially if you're on the shorter time frames, right? You're in quicker trades, you want to lock profits in quicker, and you want to move your stop and protect your capital. Next is, you don't try and catch home runs. When it comes to scalping, the main thing is, don't try and look for those home run trades. What you want to look for is those base hits. If you want to capture home runs, then scalping's not for you, because you're rarely going to be able to capture a crazy move when it comes to scalping, right? Focus on those base hits, because those base hits do add up over time. Fifth is, don't trade names with choppy price action and low volume. I know this is pretty self-explanatory, but when you try and scalp and there's choppy price action or consolidation, you're going to get absolutely eaten alive. If you trade names with choppy price action, there's no volume in the markets, it's not really doing anything, there's no news, right? That's when you're going to get chopped around, and that's where you're going to lose most of your money. A lot of traders can make money easily. We're in a trending markets, and that's when it's easy to make money. But when people trade choppy price action is when they lose money. And then last but not least is, have hotkeys program. This is kind of another tip, a little bit more advanced, but if you are going to scalp, make sure to have hotkeys in place where you can get in and out of positions fairly quickly. You need to be on your screen. So you need to have a computer program with hotkeys. If you're trading mobile, I personally would not look to scalp, right? Look for swing trading, look for longer term day trades on the 5-minute, right? If you are going to scalp, right, make sure you have hotkeys programmed, because things, as I mentioned, do move fairly quickly. With that being said, let's go on to some of the examples that I have for us today. So right here, you can see we're on my first example. This is going to be on Google. This was an opening drive play towards the upside. And right now, what I'm going to be doing is commentating over exactly what I was looking at coming into market open and how I was executing this trade in real time. So let's get into it. So Google, higher time frames. We end up having some news. So news yesterday with Google, end up breaking above our key areas, and now you can see we're above our 182, 183 as well. So for Google, higher time frames, as you can see right here, this is our key area. As long as Google maintains this 182, 183 general area now, what I like to see is this area hold for this continued pushback towards upside. So Google is going to be one of my main watches. I really want to see it kind of tap into this higher time frame key area, which is your 183, 182. So far in the pre-market, fairly bullish Now we're under 185. I'd like to see the pullback on Google for that continued push higher. If it kind of rips off the bat, I'll be a little bit more patient. But if it dips down towards this key area, this could be the dip and rip for an opening drive play back towards the upside on Google. So that's going to be my main watch coming into market open. So right here, you can see that Google is my top watch coming into market open. What I want to see is an opening drive play. I want to see the hold of your 183, and I want to see essentially the dip and rip towards the upside.
All right, keep an eye on Google here. As I mentioned, I'll be looking at the 185s on Google. Risk would just be a break underneath this 182. Okay, yeah, I have some of the Google contracts. I have some of the 185s. Risk for me is a break underneath this key level. 183.50s on Google. A stop just a break below, looking for that opening push towards your pre-market high and above.
So you can see right there, I mentioned I just got into the 185 contracts on Google. Stop for me is just a break below your 183.5, which now is low of day. And now I'm looking for that continued push towards the upside. Opening drive play, higher time frame key areas as well. I want to see that push right off the bat.
Yeah, quick pop. You can look to take the contracts were literally just up like 60, 70 cents. You can take some off on that pop and then leave some for this 186, 75 key area. Sorry, it might have been too quick, but if you had Google basically right off that opening push, those contracts just went from 170 to 275 in 1 minute. Yeah, they're $3. Yeah, 185. Make sure to scale up in towards this key area on Google. 185. No, these contracts are going crazy.
So as you can see right there, I already talked about the contracts being up over $1 a contract. We already had a super nice push towards the upside. We had a nice pop offer 183.64. And now you can see right, we're gravitating towards the upside. Contracts are moving at this point. So I'm mentioning to scale on these pops. Now we can leave some trailers to look for the next levels towards the upside.
Yeah, so Google coming back down here. We'll see if it can hold this 385. As I mentioned, it has to basically hold this 185 key area on the rest of my position.
So you can see right here, at least for the scalping wise, right, with super nice entry off that 183. We already took some off as it approached our 186. Now what we like to see is now the hold of our 185 for that continued push back towards the upside. If Google can hold this level, we expect it to continue towards high of day and above. If it breaks underneath, right, we're going to cut our position because if it breaks underneath your 185, there's a good chance you end up gravitating back towards the low of day.
And see if there's a reaction. So far, not really a reaction. Q's a little bit of reaction on the highs. Google for me has to hold this area if it wants to head towards the upside, at least right off the bat. If not, it's just going to come all the way back down towards low day. So that's a very key area. We'll see how this candle closes. So far, not really any reaction with the Q's. Okay, let's see if we can get that strong candle closure on Google or if it's going to wick. This candle close is very important. All right, so Google is technically still intact because it ended up holding this key area. We'll see if it ends up pushing back towards the highs or if it's going to reject off this area and then just continue back towards the middle of the range. So Tesla's coming back down to your 5-minute open range, 1-minute order blocks. Google so far consolidating above this, basically your pre-market high. I like to see it make a new high with the QQQ here, right? Google higher time frame bullish. There's not really a reason, right? Kind of a little bit stalling. Right? You can see this 5-minute open range. I like to see this next 5-minute break above this key pivot high, right? I like to see it for Google for me continuation. It has to break back above this swing high here.
So yeah, as you can see right there, Google is still intact. I talked about this being your higher low, basically your pre-market high level. We end up holding your 185. So I'm still in my position and I expect Google now to continue towards the upside here.
So that's a key area. That's a key area. If you're scalping it, you can look to take some off as it closes and then trail bar by bar the rest towards the upside.
So you can see right there, Google made a fresh new high. I'm talking about now you can bar by bar the rest of your position towards the upside. What we like to see is it push higher along with the QQQ on the left-hand side as well. So we like to see Google start pushing higher once Q's ended up breaking above high of day, right? You can see Q's is pushing higher. So we like to see Google follow along.
Yeah, contracts at $4 now, basically 100%. Nice push towards Google. Really nice key levels. I'm a majority of my position. I only have a couple traders. I have 7 contracts. I'm going to be looking for that 188.
So as you can see right here, I only have 7 contracts left of my position on Google. If we're looking at the QQQ, you can see we're having a little bit of reaction around this 525. As for the rest of my stop, it's going to be this 186. What I like to see happen on Google is this continued push back towards 188. And if it breaks back underneath 166, I'm going to cut the rest of my position on Google.
Yeah, that's going to be my key level for Google. Your 186. I only have a very small. I only have 5 left, so I'm leaving 5 for that 188 on Google. We'll see if we can potentially get there. As for Google as well, if it goes underneath, I'll cut the rest of my remaining position on Google. It looks like it will right here. So yeah, cut the remaining on Google. Break underneath Qs right here as well. So
you can see right there, I end up cutting my position on Google. We end up having a super solid trade off your 183.64. End up scaling majority of my position up and towards this first pop. End up leaving some contracts for this continued next push towards the highs. Sold some up into this area and ended up cutting my position once it broke back underneath 186. So this is a perfect example of how I manage my position. This is a great example of a mini scalp / day trade and we ended up managing this position very nicely. Once it broke back underneath that 186, I ended up cutting my position. This ended up being a super solid trade. Contracts were well over 100% on this one for a nice opening drive play towards the upside. So let's go into the next example that I have for us today. So right now you can see we're on my second example. This is going to be on Microsoft. This is another higher time frame break towards the upside. Today, on the higher time frames wise, some of the nicer looking higher time frames, I do like Microsoft. So Microsoft, higher time frames, you kind of have this like wedge pattern so far. A couple of rejections off this key area. So if we can really get above this like 233, I do like Microsoft for kind of this level that it's at currently at. So kind of this break and retest of this previous day high, your Monday's highs as well. Kind of this trend line. I want to see if Microsoft can get bought up, and then we continue back towards your pre-market high, potentially higher. So yeah, you can see right there, Microsoft, I mentioned, right, higher time frame break. We're coming back to basically retest your previous day's high, the retest of your trend line as well being your 433. What I want to see is that continue push back towards your pre-market highs and above on Microsoft.
So yeah, you can see so far Q's right around this low of day level. Microsoft showing some relative strength here intraday. Microsoft now, if you can get that, now be the 5-minute opening range if it will pull back. This one has extreme relative strength with that higher time frame break so far. All right, keep an eye on Microsoft. I'll be looking at the 437.50s, basically this 1-minute order block in combination with your 5-minute opening range as well. I want to see the reaction off of your basically your 136 key area. Yeah, the Microsoft. So I picked up some of the Microsoft, the 137.50 calls on Microsoft. I like this. My stop. This one, I'm going to give it a little bit more room. This is a higher time frame break on Microsoft. I like the relative strength as well. So I'm going to give this one some more room on Microsoft. Stop for me is going to be really that break. Let's say your 433.50s on Microsoft. That's going to be my key level for Microsoft.
As you can see right there, just ended up picking up some 437.50 calls on Microsoft off its 1-minute order block and 5-minute opening range as well. I like this on the higher time frame, so I like this for a push back towards the upside. So yeah, as you can see right here, Microsoft basically retesting your 5-minute opening range and your 1-minute order block as well. You can see the relative strength compared to the QQQs. You can see the Qs is basically in a downtrend so far at the start of the day, mainly consolidating underneath its opening range on the 1-minute, whereas Microsoft showing extreme relative strength above its opening range candle, and we're above our previous day's highs as well. So I'd like to see for Microsoft that continue push back towards the upside.
Yeah, nice push on Microsoft. Look to take some off here. This is the only level I have, which is your 438. So you can take some off here on 348. Really, Microsoft clear shots. I don't have any other target besides this next key level, which is all the way up towards your 344. So that's kind of my the level I kind of want to see gravitate towards. There should be a little bit of reaction around here on Microsoft, but really the next general area is going to be all the way up towards just like 442, 443 general area on Microsoft.
So yeah, I mentioned on Microsoft, right, we're having a nice push towards the upside. Qs are reclaiming your opening range candle as well, getting back inside the range. Microsoft, nice continue push back towards the upside towards your 438. That's where you can look to take some off and then look for the next target above.
But yeah, I took some off there on Microsoft kind of as it went up towards that 338 now. Really my main target. I'm holding majority of my position. I'm looking for this like 442, 443 general area. Great trade, easy, 3600, nice. Three cons, Microsoft. Yeah, no, Microsoft, this one should have a, let's see what happens with the keys. This one so far, extreme relative strength on the higher time frames on Microsoft. This one clear. As I mentioned, the trend line, I'm not sure why I didn't have it within the first 5 minutes pulled up. I talked about this, I think it was either in the pre-market prep or right before I hopped on. I was like, Microsoft, higher time frame swing or day trade, we're looking for that trend line break on the higher time frames. I'm not sure why I didn't have it pulled up within the first 5 minutes. Yeah, this one is exploding. Yeah, contracts 410. Yeah, no, this one is moving. Yeah, Microsoft, as I mentioned, I don't really have any key levels besides this 442, 443. I'd probably just say 440. That's kind of the key psych. So you can look to take some off probably at 440.
So you can see so far, really nice push on Microsoft off our 436 key area. We're now above our 438, and now we're pushing towards the upside. I mentioned you can take some off here as it approaches that 440. Really, the next higher time frame key level that I have is 442, which is a little bit farther away. You can see the keys are pushing back up as well. So you can look to take some off on Microsoft. So what you can do right here is essentially buy by buy your position and look for that 440 on the higher time frames.
Okay, so Qs hit high day, got back underneath, coming into 10 o'clock here. So for Qs coming to 10 o'clock, we have 1 more minute here. So we'll see how the Qs forms coming into this 10 o'clock red folder news. For Tesla, as I mentioned, don't look at every single 1 minute candle on this one. It's going to be a swing. As for Microsoft, I'd like to see it hold this like 438 level. So far, it's trying to close back underneath. We'll see what happens on Tesla. Sorry, for Microsoft wise, I have 50% of my position left. I'm going to see how this like 10 o'clock forms. I'm going to be on the 5 minute now for Microsoft as well.
So as you can see right here for Microsoft, if I was scalping this, I would have ended up stopping the rest of my position underneath this 438 level. I ended up having a higher time frame thesis on this one, so I wanted to hold it for higher time frame objectives. So I ended up taking this as a swing for the next day, and ended up being an awesome higher time frame move on Microsoft. But as a scalping opportunity, this ended up being a super nice push towards the upside as the contracts ended up moving over 100%. So yeah, I hope you guys enjoyed that video of me recapping over my live session that I had. I do this every single day. So if you guys do want to join and watch me live trade every single day, you can in the link in the description below. With that being said, hope you guys enjoyed that video. Merry Christmas and happy holidays to everyone that celebrates it. And with that being said, I'll see you guys next week for a brand new video. Peace.